Ever wished for a financial safety net that's more accessible than a traditional loan, but offers more flexibility than a credit card? Well, you're not alone. Today, we're diving into the world of Koho's line of credit. It's a financial tool that's been making waves, but how does it actually work? Let's break it down. First off, what exactly is a line of credit? Think of it as a revolving loan. You have a set amount of money available to you, and you can borrow from it whenever you need. Unlike a traditional loan, you don't get a lump sum up front. Instead, it's like a credit card, but often with lower interest rates and different repayment terms. Now, Koho's line of credit is a bit different from the traditional ones. It's designed to help you build credit, not just access funds. It's like a gym membership for your credit score. But how does it do that? Well, Koho automatically deducts a small amount from your account each month and reports your on-time payments to the credit bureaus. This helps you build a positive credit history. But what about the money? How do you access it? Well, once you've built up some credit, you can increase your line of credit limit. This means you can borrow more money. And when you do, you only pay interest on the amount you borrow, not the entire line of credit. It's like paying rent on an apartment. You only pay for the space you use. So, let's talk about the benefits. No hard credit checks, no interest on the unused portion, and it helps build your credit score. It sounds almost too good to be true, right? But remember, there's usually a catch. In this case, it's the monthly fee. Koho charges a monthly fee to use the line of credit. So, while you're not paying interest on the unused portion, you are paying a monthly fee for the privilege of having the line of credit available. Now, is a Koho line of credit right for you? That depends. If you're looking to build credit and need access to a small amount of money, it could be a good option. But if you need a large amount of money or have a good credit score already, a traditional line of credit or personal loan might be a better fit. It's crucial to understand that building credit takes time. It's not a quick fix. You need to make consistent on-time payments to see real improvement in your credit score. And remember, just because you have a line of credit doesn't mean you should use it. Only borrow what you need and can afford to repay. So, there you have it. A breakdown of how Koho's line of credit works. It's a tool, and like any tool, it's best used when you understand how it works and when it's the right tool for the job. With that said, thanks for watching, and until next time.